All right. I am pumped to have Stinson, Dustin, and Allie with me today. This is the first four-person that we've done, and the lumber episode was the second most listened to episode now of all time. People really want to know about lumber, which I don't know if that was exciting 10 years ago, but it sure as hell is right now. So let's just start by just kind of going around and everybody just giving a little bit about who you are and kind of what your where your career is right now and what you're doing.
Sure, I'll start. I'm Stinson Dean. I was on a pod with you earlier that kind of kickstarted. It was really good timing on your part, Chris. Right before lumber became a meme stock, basically, you and I got on and did a real deep dive into lumber. So, for those who didn't listen to that, I'm a lumber trader. I buy and sell physical lumber. I hedge it with the futures market, and I sell to lumber yards. I don't sell to home builders. I try to make money buying low and selling high effectively.
Allie?
Yeah, hi, I am Allie Wolf. I'm the chief economist for Zonda. And I would say, Stinson and Chris, there's nothing that hurts me more than being in second place. So we got to try to get this one above your other one so we can be the most listened to. But Zonda is a housing data and consultancy firm, and we track the entire building life cycle from raw land all the way up to the closing out of new home communities. And in my role, I just have to make sense of what's going on in the market.
Yep. Dustin?
Great. Yeah, I'm Dustin Jalbert. I work as a business economist for Fastmarkets. Fastmarkets is a price reporting agency that covers really the global commodities industry, everything from metals to agricultural commodities to forest products. And so I work on the analytics side of our team. We have a price reporting business with editors and people who sort of go out and pull prices on the markets. Probably folks listening on the pod here have probably heard of Random Lengths. That's a part of Fastmarkets. So they're our partners on the editorial side. But yeah, I work on the analytics side, and I've been covering softwood lumber for a few years now, and been covering forest products in general as a business economist for a better part of a decade now. So it's a little bit about me, and it sounds like we've certainly got a high threshold to jump here with second best pod of all time here with
good luck, guys. It wasn't lumber; it was me. In fact, was a driving force behind that.
So lumber is going nuts. It's actually the last couple weeks started cooling down. It's I think it hit a high 2 weeks ago, but everybody here is coming from a different kind of experience and a different view of the world. So we'll kind of segment these into different topics, and feel free to jump in. But let's just kind of get started with housing, Allie. What has lumber, this meteoric rise in lumber prices, and even where we stand today, like what is going on in the industry at a high level?
Yep. So high level, I'm sure everyone knows housing is just hot, 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 hot. We've heard every word thrown out: outrageous, frenzied, feverish, whatever it is. We're seeing that builders had planned going into 2020 and 2021 that housing was going to be good. They didn't plan for it to be any of those words I just used. And so they're running into supply chain issues across the board, whether that's running out of lots, whether that's running out of laborers, whether that's just struggling to keep customers happy. Because if you can't get a tub in a house, customers are getting really upset too. So there are these frustrations on the housing market side where demand couldn't be better. We're just running into hurdles after hurdles when it comes to the supply side landscape. And I'll finish with just the natural result is that prices are going up. And mostly that's because of the input costs. You hear that directly from the builders. Second to that, though, it's just that they're trying to limit demand because they can't keep up.
Yep. And how has lumber impacted kind of home building? Are builders just building with the new pricing, or have a lot of the big boys kind of hedged, or how are they able to kind of digest all this price movement?
Well, it sounds like from our conversations, it's going completely back into the home price. So the builder gets the higher lumber costs. And right now, because inventory on the resale side is down 50% year over year, in some markets, it's even greater than that, people just want a home. And so if a builder goes back and says, hey, I'm going to raise prices, consumers are saying for now, okay, that's fine. There are, I think, what we're calling the invisible price ceiling. We don't know when we hit that threshold where builders can no longer pass that on. And you can talk to some builders and they'll tell you they've already hit it. And other builders say they really see the runways about as far as you can see. So right now, the lumber side is just getting absorbed by the consumers.
And do they kind of think that if lumber drops back down to kind of normalized levels and they've hit this new price ceiling, the margin's just going to expand again? Or do you think we'll see prices kind of follow commodity prices?
I don't see builders at all trying to adjust the prices back down. Yeah. So I do think margins will remain high, but we'll have to watch with what happens with interest rates, because that of course, is then the third wild card that builders are trying to plan for as well.
Allie, I'm curious. Sorry, Chris, can I pop in here?
Always.
Is there an area of the country, or is there any regional trends where some builders have said, hey, we're not able to raise our prices, where other areas of the country they are? Is there any trend there, or is it random?
It's a great question. And I would say from my experience, I have not had any builder in any market say that they can't raise prices. It does seem that right now, the lowest price point is going up the most in terms of, if it was selling at 200, now it's selling at 350. And that's where we're hearing some cautiousness from the builder, but it's not that they don't have the buyers. I think what they're saying is we have people that can build this up and push these prices up today. But what about local incomes? Because at the end of the day, you're going to be dependent on these individuals who haven't seen their incomes go up to the same extent. And there's just some cautiousness about what that looks like. But right now, I wouldn't say it's one region or one location over another.
And you said resale inventory is down 50%? Like, is that existing homes?
That's existing home. We use realtor.com. It's my favorite data. They just publish it on a regular basis and by market, and it's free. So I like that as a data source. But yeah, down 50%. If I'm remembering correctly, places like Jacksonville, Florida, and Riverside, San Bernardino, which are two of the hottest housing markets across the country right now, they're off closer to 70% year over year.
Wow.
Why won't people sell their homes? I don't get it.
Because they get overpaid and then they go overpay somebody else.
Yeah, and there's no homes to buy. What are you going to move into?
You build one, guys. You just build a new one.
True.
No, and they refied too. So you locked in a 2.5% interest rate, and now interest rates are 3%. That still impacts the monthly payment because prices have gone up over the same period too.
Dustin,
cool, thanks.
Dustin, let's move to your court for a little bit. We talked about this a little bit with Stinson on the prior, but you have a really unique insight into what's going on with Canada and the sawmills and everything. So what's kind of the state of the union with sawmills, and what, from your perspective, caused this massive run up in prices outside of just a lot of home demand?
Yeah, I mean, obviously right now, you mentioned it, Chris, we're kind of heading into another round of standoffs here between buyers and sawmills. We've hit a point where obviously, the price for lumber is continued to soar, at least in the cash market. We've obviously seen some correction in the futures price, but cash is still creeping up. We're talking, based on at least what we report for the Random Lengths, framing lumber composite price, we're up over $1,500 per thousand, but some framing, lumber prices are $1,600, $1,700 per thousand. But momentum is slowing. And I think you've got a couple of factors at play. One, I think, some of these disruptions in the supply chain are really starting to bite into sort of building activity. The demand is there, but, the supply chain can't keep it at, 1.8, 1.9 for housing starts. That's just not going to be sustainable right now, at least from a lumber perspective. And so I think, there's some cooling there that you're seeing. The other thing you got to think about too is, we're kind of heading into the seasonally sort of strong period from a demand perspective for lumber, right kind of into peak building season. Buyers are starting to see, kind of a few months ahead now into, say, July, and, demand starts to roll over there too. So I think, wholesalers, distributors are kind of seeing light at the end of the tunnel here that, okay, peak demand season is getting behind us. So they're kind of pulling back a little bit, hoping that maybe a correction's on the way. On the supply side, from a production perspective, the industry data does show that we are seeing some improvements. mill inventories are picking up some. And, when inventories kind of hit closer to historical norms, that's when mills will be willing to start discounting their wood. We're not quite there yet, but I think we're getting close. The shipment data, the high frequency data is showing improvements. So the supply side is improving, but the thing that's really challenging for the industry right now, both Canadian and US, is labor continues to be a real constraint for the industry. Wood products employment in the US, as of I think April, is still down 2 to 3% from pre-COVID levels. We're down in an employment perspective, but demand is up 5-10% year over year, or closer to 10% year over year. That's a big disconnect. Mills can't add overtime, or they are starting to add shifts slowly, but it's a grind to get people back at the operation. So that is still a supply constraint right now. We are rebalancing. I think you're going to start to see a little bit more, power going to the distributor wholesaler, but we're still kind of in a tenuous moment here where prices are going to go.
In Chris, So, Chris, if I can jump into one thing on the labor front, I just wanted to make sure that we really hit on is the same things happening in residential construction. So we have our jobs are actually up compared to pre-pandemic levels, but up 43,000. When you look at the year-over-year change, they're completely out of whack with how high have home sales gone up compared to residential employment. But I think this is one of the most important numbers that I have heard. This came from my friend is the chief economist at the National Association of Home Builders, and they've done this research. So in 2020, we hit 1.4 million total housing starts. And there are a lot of forecasts that say, hey, we're going to hit 1.7. So to go from 1.4 to 1.7, you need, by their calculations, 400,000 more workers to be able to build those homes. And if we think we can get 400,000 more workers, then great, go ahead and say your forecast is 1.7. But if you think there's going to be constraints, and we're even hearing it it sounds like, Dustin, from the mill side as well, I think that's one of the important considerations we have to play into the discussion.
Yeah, it's just, we're still constrained from a production perspective. And it's like that across the manufacturing supply chain, right? It's not unique to wood products. It's not unique to residential construction. I think, wood products, it's probably the most jarring because, for so long, lumber here has kind of been one of the hottest commodities on the planet. So it's kind of weird to see employment down and demand up so much. And also, to go back to your original question too, Chris, about what's caused this pricing volatility. What happened last year, mills thought the sky was falling in April and May when we had over 20 million people on unemployment insurance. Whole sectors of the economy were closing. I think Stinson talked about this last time in your pod too, but, mills shut production in a big way. In April alone last year, in 2020, we probably had 20 to 30% of the industry capacity in North America that was just curtailing, that stopped producing. And demand didn't move accordingly. It went in the opposite direction. And so we produced this massive hole in inventory and distribution. Wholesalers, distributors dumped their inventory. Mills weren't producing, so their inventories were selling out of inventory. And, we think instead of starting 2021, based on our estimates, normally you start the year, at a wholesale distributor level between, say, 45 to 60 days of supply of inventory in the ground. We probably started 2021 with 25 to 30 days of supply. And so that is very short considering, this level shift in demand we've seen. And there's other kind of longer term factors at play that we can talk about too. But in the short term, that's accounting for a huge portion of the volatility in the market we see right now. It's a huge factor.
And from a trader's perspective, if you're a sawmill and you have very little inventory, or for anyone, like if I have very little inventory, I'm very conservative on my pricing. Like if you're going to buy this from me, you're going to pay me a very, very high amount because I have nothing left. And once I sell it to you, I can't sell a little bit to someone else and split it up. And so that's how these mills, their mindset, like we don't have a bunch of inventory in the back that can fill holes, or we need to move a bunch of 16 footers because we're overproduced. They just don't have that pressure. And so to have something to sell every day, and what Ali said, the home builders were doing the same exact thing to limit demand. They just raise prices. And there's only a few people who are willing to pay the higher price. And they're the ones that are going to buy the few amount of houses or the few amount of rail cars that are available. So it's a beautiful, free market, and it's fun to watch.
Yeah. And normally too, like, basic economics, right? The price goes up and we normally get a supply response, right? That's just sort of how markets work. And between the pandemic and some longer term factors, we had a bunch of mills that closed in British Columbia in 2019. For market related reasons, prices were down, and there's a wood fiber shortage there from a log perspective. So I mean, all these factors just prime the market, so there's just not incremental supply that can come in, and hence prices can kind of go anywhere in the short term. We're out of equilibrium. That's sort of what I've been telling clients. We're out of equilibrium. It's going to take time for that to resolve.
And what we're seeing on the builder side too, a reaction to that, is if you look at the new home sales figures, what we see is homes that are sold but not started is at the highest level since 2006. So for a long time, builders were just saying, I'm going to do dirt sales, I'm going to pivot, or I'm going to just continue to sell the lots because we want to strike while the iron's hot. Well, now builders, when we're talking to them, they're shifting away from dirt sales, and they're saying, hey, that's taking a lot of risk on our end because we don't know what the input costs are going to be. And so we now have builders that are pushing forward more with a spec model, which is what we've seen in the past, but builders just haven't been doing that as much, where they're building the homes, and then once the drywall's in, then they have a good sense of how much their costs are, and then they're willing to sell it. For a consumer, though, it takes away some of their optionality. You're not able to make as many changes as you initially would wanted to, and that's why you would have bought a dirt sale in the beginning.
Right. Yeah. Like, folks are just anecdotally in my world, if I'm going to pay this much for a house, I might as well get a new house that is exactly how I want it to be. And that would limit some of your options. Would you say, Ali, that home builders, because it seems like you say the word spec home, it's like a 4-letter word. Like that's what got them all in trouble 12 years ago. Like, are they going to, putting supply constraints aside, do you see them building as fast and as many spec homes as they would pre-sale homes, dirt sales?
So asking about the mix of them?
Well, like if someone's going to, it's just easier for a builder to have it pre-sold and then build it. Like they could be more aggressive and sell more homes, I would think, from a risk management perspective. But if they're not sure if there's going to be a buyer on the far end, do they, on the back end of building a spec home, do they build as many spec homes, or do they throttle that back, thinking the bottom can drop out at some point? So they're not as aggressively building because they don't have buyers locked in.
I would say I'm not seeing that right now. I think that builders think if you build it, there will be someone. No questions asked. I'm not seeing much hesitancy. I think since we would head that way, I think if we start to see more resale inventory, if the foreclosure moratorium falls through, if you start to see just some better equilibrium or a better match between supply and demand, I think builders will start to be more cautious. Right now, it's get it on the ground, and you get it on the ground and you sell it, and you sell it with a good margin, and you're going to sell it quickly. And so they don't have an incentive to be limiting that for now.
Do you have any data? Sorry, Stinson, do you have any data on how much demand is being generated because people are leaving the New Yorks and the San Franciscos of the world and coming to the, more spread out single family community type areas? Like, how much of that is driving single family home buying? Is people rethinking how they want to live?
So there's a whole bunch of different data sets that don't give you a singular number. So I can't tell you it's 30% because of that. But I can tell you the markets that are doing the best are the markets that have the most out-of-town buyers. The areas in different markets that are doing the best are the areas that are further away from the central business district. And the markets that are seeing the highest home price appreciation often overlap with the markets that have the most in-migration from higher cost areas, allowing them to drive prices up. So I think all of those should point to the conclusion of what you said, is a lot of this is people are just shifting where they're living. They no longer have the tethers to the office the same way they have in the past. But I don't have a firm number to say, hey, it's 30% of the market that's doing this.
Yep. Dustin, let's talk a little bit more on the sawmills. are they printing money right now, even with lower labor, because there's huge margin? Like, who's making all this money, and what incentives do they have to go back to full capacity?
Well, yeah, I mean, the mills are making, money hand over fist right now, cash hand over fist. I'm sure, folks listening to the pod here, probably followed some of the builders sort of their latest sort of earnings calls. A lot of them sort of making record returns, record quarters in terms of their earnings. Mills are very profitable right now, even high cost mills. So, just for listeners, your high cost lumber producing regions in North America are, generally British Columbia, which, part of that is log availability issues. Your biggest cost, your cash cost for production are your logs. That's anywhere from 50 to 70% of production costs. And then on top of that, Canadian producers have a duty. Right now it's 9%. I know there was a recent announcement that the preliminary sort of level will be set to 18%, but that's still to be determined. But there's that as well. And then the Pacific Northwest in the U.S. too is high cost. And, that range for the industry right now, and this is not factoring labor productivity issues, but just generally, high end of the cost curve is probably somewhere between $450 to $600 per thousand board feet. With lumber at, 2x4s at $1,500, $1,600, $1,700 per thousand, that's a huge cash margin even for high cost producers. And those high cost producers have log constraints to some degree. When you go to the South, there are not log constraints. There was a good, I think, Wall Street Journal article about this recently about how timberland values have been incredibly suppressed over the last decade or so as a fallout of the housing crisis, just because there's so much wood sitting on the stump. And those mills are making, much, much higher margins than those high cost mills. Break evens are probably, even on the high end, $250, $350 per thousand board feet just for variable costs of production. I mean, that's a ton of cash generation in a short period of time, right? So these mills have had this sort of almost cash bonanza these last couple quarters. And a lot of that's getting returned, special dividends to shareholders, things like that. But some of that is getting reinvested in industry capacity and improvements, CapEx at the mills, things like that. So,
and when I think about that, and our Uncle Jeff Bezos always says, "Your margin is my opportunity," and I hear that British Columbia shut down several sawmills. Are there a lot of barriers to entry for people to start opening up sawmills and getting back into the game, or is it kind of like the mafia? It's kind of just a closed-knit world. How come more people aren't getting into this business?
Well, I think so. Part of it is an industry psychology thing, right? So I think I would say, just as someone who's covered forest products, the capital investment is not huge in the grand scheme. You're talking for a greenfield, state-of-the-art sawmill. Probably right now it's on the higher end, so it's probably maybe $150 million for say. What's that?
Where would that mill be at $150? $150 million.
That would, probably in the South. So that's where all the CapEx is going for the most part. But, generally, that's for a mill rated at, say, 250 million board feet annually, which is a good size mill. So, I think from a capital perspective, it's viable. But I think what's happened is the industry has been very careful about adding capacity over the last decade from this fallout of the global financial crisis. You saw about 20% of the industry capacity base got knocked out between 2005 and 2009 when housing crashed. And they've been very conservative with their capacity investments since say 2010, 2011. The North American capacity base has grown by about 1% a year, give or take. And some of that was out of necessity because demand was really low, operating rates were really low, and the price of lumber was pretty cheap from a historical perspective. So a lot of mills were really suffering. So, they've kind of managed the CapEx, and with the expectation that demand was probably going to grow maybe, 3-4% a year, not this kind of level shift of 10% overnight. So this caught the industry off guard. So I think from the perspective of adding capacity, it's certainly viable in a place like the South where there's timber availability. There are constraints when you start talking about, material coming out of Canada or out of the Pacific Northwest where the log prices are higher. They're more what we'd say they're tenser log baskets. There's just not as much availability. And there's a variety of reasons for that. And that's what, deters some CapEx to some degree. And, frankly, uncertainty around the duty, the lumber duty on Canadian mills as well. That has, there's been a sort of round after round of softwood lumber agreements between the U.S. and Canada. There's no longer an agreement right now. It's just a combined sort of countervailing and anti-dumping duty that's been adjusted the last few years on Canadian mills. And so, that does deter capacity investment. British Columbia probably wouldn't be adding much anyway because they have this mountain pine beetle kill that's decimated their timber basket. But in a place like Quebec or Ontario, where there is fiber availability, timber availability, there's other challenges there, but you probably could see some capacity on the margin come in if there was, sort of a stable duty that everyone knew what to expect 10 years down the road, and that could attract capital investment. So,
what is the log and tree situation in the U.S. Pacific Northwest? I don't know much about that. You're saying it's tight. Like, how is that fundamental setup?
So, part of the issue here is, so it's a couple things. So first, historically speaking, the Pacific Northwest used to be very dependent on federal and state lands for logging. And in the 90s, there was this episode called the Spotted Owl Crisis, where the spotted owl, which I think it was deemed endangered, an endangered species. As a result of that, a lot of federal lands that were logged on were effectively cut off. And that had a huge impact that knocked out a lot of mills in the Pacific Northwest. And so that's a very bitter issue with the industry, the U.S. industry in particular. And obviously, the U.S. coalition and environmentalists sort of butt heads over this, right? And it's still an outstanding issue. But as a result of that, the timber available to sawmills and wood products mills, it's mostly on private lands now, and there's a relative sort of concentration of land ownership in the Pacific Northwest that just makes log availability really tight. There's also a pretty robust log export market to Asia too, so that's another source of demand. So when you look at globally, usually when lumber prices go up or wood products prices go up, usually log prices go up. And you see that in the Pacific Northwest. You see that in Canada. Canada, it's a little different. It's kind of a managed system because it's on Crown land. In the South, you don't have that connection right now because there's too much timber sitting on the stump that's mature. So,
and the reason I ask, because as a trader, I largely can substitute Pacific Northwest species, Engelmann spruce, ponderosa pine, hem fir, for Canadian spruce for single family homes. And if we can get more Pacific Northwest lumber cut and sent, that'll alleviate the pinch coming out of Canada. Because the argument I've made for a few months now is we just don't build homes out of southern yellow pine. I don't know. I guess it could be possible, but right now we won't have to change a thing in how we build homes if we can get more ponderosa pine out of Idaho sent, to Atlanta. So I've been curious about the logging situation up there. And you're saying that because the spotted owl story from traders who mentored me, it's like infamous. It's before 2018, that was the high price. It's this crazy spike because the Clinton administration shut down all logging in these federal lands to protect this owl. And are you saying like that decision from the 90s is still what is limiting logging on federal lands?
Well, I mean, it's a factor, right? I think that the Trump administration before sort of his administration was up, I think he did announce that. I don't want to quote the exact amount of acreage, but there's a substantial amount of land that could be opened up for logging purposes again. I think it's under review right now under the Biden administration. So I don't know what I don't know what the outcome of that will be. Obviously, there's clearly some politics there in terms of, there's an environmentalist contingent that probably doesn't want to see that open up, right? And
well, that is the easiest way for us. I mean, I say that I don't know if we have the capacity. The capacity probably matches the log supply. So if we open up more logging, I don't know if the mills are at capacity to cut more.
I mean, so I think there's potential there, right? I mean, I think there's a cost benefit analysis that, policymakers, environmentalists, the industry's got to make there. I would say though, when going back to the Southern Yellow Pine thing, the industry is finding a way to use the material. And I think for listeners, what's important to keep in mind, a good chunk of Southern Yellow Pine, probably a little over half of it, is used in treated applications. Southern Yellow Pine, it's like a sponge. It absorbs treating chemicals. It makes a great treated material, which is obviously used for more exterior purposes, decking, any sort of outdoor application, right? And that traditionally is where it's dominated. But over the years, they are finding more and more ways to use Southern Yellow Pine, and it's gained share over time in terms of the U.S. market. And it's become very big in truss manufacturing. It's a fantastic material for that. There was a lot of lodgepole pine out of BC that was affected by the beetle kill that was used for what's called machine stress rated lumber. And you use Southern Yellow Pine's a perfectly fine substitute for that, and that's great for truss manufacturing. So you are finding places that it is gaining share. And right now, while SPF availability is tight, you are hearing more and more about it. Southern Yellow Pine sort of going deeper into the Midwest, into the mountain states, and certainly gaining share within the South. I think the issue with pine is as it moves through zones, it's susceptible because it is kind of sponge-like. It is susceptible to warp and twist when you move through a zone and there's a change in humidity. So that is a challenge with it. But I think there is a lot of timber down there that needs to be used. And I think, you look with the Canadian producers of SPF, they've gone and acquired a lot of mills in the South and made huge capital investments to improve the quality of the stick coming out of those mills down there. And so they see a future for Southern Yellow Pine in home building. So,
well, Dustin and I notoriously disagree on the future of Southern Yellow Pine, and I'm just going to go ahead and dig into it. Like it's interesting that it gets used for truss manufacturing, and I'm making some assumptions, but it gets cut at the mill, put on the truck, delivered to the truss manufacturer. So it's not sitting in the yard. It's applied, in a assembly line type style, and it's effectively installed right away. And the pushback I've always heard is, Southern Yellow Pine can't sit on the racks at the lumber yard. It can't sit on the job site. Like, it has to get installed pretty quick because it starts changing its shape, and it's dense and heavy, which makes sense for trusses because they need the better span ratings. But would you agree with the current iteration of Southern Yellow Pine, you can't make stud walls with it on a production scale?
It's not a stud material like an SPF, but I think the one thing I would counter Stinson, there's more and more housing construction that's happening in the South, right? That's the epicenter of home building. It's in Florida. It's in Texas. Obviously, California is big too, but for single family,
Atlanta, Carolinas, Virginia. Right. I mean, it's really it's super ironic that the baskets of the most abundant U.S. fiber is right in the middle of all the biggest single family home markets, and we don't use it to build homes.
Well, I've challenged that a little bit. I mean, the material is being,
you two break it up.
Used. I know it's getting heated here. So,
can I jump in? Can I ask a question? So this goes back to Chris's original question. So we're going to go full circle on this. So what I had heard recently is that there are 2 mills that are getting built right now, and they'll be built by the end of this year, and it'll take till the basically middle to end of 2022 for them to actually have be coming online, going at full capacity. And the number I had heard is that those would support 130,000 new single-family housing starts. So my question is, when you're building up a new mill, does that number smell right to you? What's a number that you're looking at to be able to hit those. To me, 130,000 a year was such a low number for, I guess, what I had thought. And when we're trying to build more homes. So how does that stack up to what you've heard?
Well, I mean, so there's a lot of capex going in the South. There's definitely a fair amount of greenfield mills. The standard sort of, when you're talking about the mills coming into the market, they range from 200 to 300 million board feet a year in terms of the capacity. Those are pretty sizable capacity investments. And based on our tally, there's, about 1 billion board feet a year being added into the market in the South. So there is capacity coming, and it is going to meet some of that need for construction. I know Stinson challenges me on that, but it is going to get used to some degree. There's going to have to be some reshuffling in terms of the material that's used to get those homes assembled. I think a standard average size single family home, uses, at least for softwood lumber around, 15,000 board feet, give or take 15, 16,000. I think depends on the source that you talk to. So, those mills can build a lot of homes. I do agree with Stinson though, that you can't just use all southern yellow pine to build a home. You need the SPF for the stud material, and you need, Doug fir in some cases is a preferred materials, for certain applications. So they're not perfect substitutes for each other. But when you think about it from a holistic perspective, from North America as a whole, there's going to be some reshuffling of where material is going so that the SPF gets spread around for the optimal, usage, and where southern yellow pine can be used for, top plate, base plate material, truss manufacturing. You're hearing it, multifamily, you're hearing it used for panelized construction. It's going to fill some gaps in the market that is needed, but it is going to create growing pains for the industry. I don't disagree with that at all. I think it's taking time for people to adjust and use the material, but those mills will support, quite a bit of demand for homes here.
Yeah, Ali, I did the math. If we did 15,000 board feet into 250 million board feet production, it's about 16,000 homes per one mill brought on.
And
the
thing is,
I guess, but not all 250 billion go into, it's probably half or less. So,
well, they're not all the material is going to be, the high graded or it's not going to be necessarily framing grade material. There's industrial grade material that comes out, when you cut a log, they try to optimize this as much as possible to get the best value out of it. And usually that's for framing lumber or higher grade, appearance grade applications for lumber. But, sometimes you just get a log that is no good, or, it's just a lower grade material. So it's going to be used for pallets or industrial packaging. So at Stinson's point, yeah, not every stick of lumber from that mill can necessarily go to build a home, but the type of state-of-the-art technology they're putting in at the mills in the South with, the laser technology for optimizing the log, before it goes through the gang saws or, the sawing operations, the auto grading that's being implemented, which is also a big way that they're mechanizing the process, continuous drying kilns, all these things are, making the product, compared to even say 10 years ago, the quality of the stick coming out of the South is much, much better on average than say, 10, 20 years ago, when a lot of the material, again, was either, you're talking treated material, again, for decking or exterior purposes, or more industrial grade or something that would go offshore. So,
are you seeing those investments that you just lined out, those advancements, are those across the board in Southern Yellow Pine, or do you see the Canadian-owned ones moving first, or are they all keeping up with each other?
I think there's, the Canadian share is pretty high. I need to check. It's off the top of my head. The Canadians own about it's between 30 and 40% of the Southern Yellow Pine capacity. So they have a substantial share, and they've been incrementally, through M&A and also greenfield investments, building out their share of that market, because they know that's where the kind of the last game in town for saw timber is. So, they've been making pretty significant investments over the last decade. but there's kind of non-incumbents that are coming in too. You have, for example, Idaho Forest Group, which is not a traditional southern yellow pine producer. They're one of these greenfield mills that Ali was talking about. They're coming in and building a southern yellow pine mill. You have a company like Buer, which they have an existing operation down south, but they're traditionally a Midwestern sawmill sort of business. And so you have new players coming in too and adding capacity. So the industry is convinced that there's a place to sort of fill the void for SPF and the lack of production that's going to come out of the Pacific Northwest. But end users have got to figure it out too. There's some adaptation and changes that are going to happen from a builder perspective.
Ali, have builders ever talked to you about Southern Yellow Pine versus Pacific Northwest dynamic? Have you
Yeah, honestly, no.
It'd be a good question for them.
Yeah. I don't have any insight on that. The only thing I wanted to add from the builder's perspective, what's become really frustrating to them is that they are getting robbed. People are coming on and stealing the lumber because people are so excited to have access to lumber. And so builders have tried to hire security. And for a while, I think the builders that got in early were able to protect it. But now what we're hearing is that the security companies have become smart to it too. And now they're charging just these ridiculous prices to preserve the lumber. So builders say that that's like a shocking cost to them when they're already facing all these supply chain issues. They also said that another problem is they're going on, and maybe this is common knowledge, but they're on allocation. So they can only get a certain number of packs. And they said, like, when the packs show up early, the packs show up late, the packs get stolen. Well, then, like, you're stuffed, or at least stuffed for a while. And then that's just causing additional headaches. That's causing additional money. So all these different issues that are coming from that.
Yeah, I think
we had some friends, their engineered I-beams, 9 of them got stolen. And it's one thing for the money, but it's also that screws up the entire schedule.
Stinson posted a picture on Twitter the other day of him sitting outside with his family at a 12-person wooden table. And I think I told him, I would go, when was I didn't know you bought $1 billion table before. That's a 2021 joke. I have a couple of dumb questions from a private equity perspective. Going back to the question is like, why do the Canadians control everything? It seems like from an opportunity perspective, private equity would be jumping into this industry like crazy. And then the second question, Apple, if you think of Apple, they have all these trade secrets and patents. Do the Canadians hold some knowledge that the rest of the world just doesn't know about? Like, I'm the dumb guy in Texas that just thinks, hey, we're cutting down trees and we're cutting them into little shapes and we're shipping them across the country. Like, why is this industry not being infiltrated, and why do the Canadians seem to have like a strong arm on this?
I don't know if strong arm seems maybe a little strong as a statement, but I mean, I think the reason that they've been maybe not ahead of the curve, but they've been proactive, let's say, is because, again, especially the British Columbia based producers, they've known about this beetle kill situation for 2 decades now. This is a slow moving sort of ecological disaster, basically, that in the early 2000s, they knew these pine beetles were probably going to devastate their timber base where most of their assets were based. And, they said, look, the reality here is that there's going to be too much demand for timber and not enough supply. So if we're going to continue to be sort of relevant and the market leaders in this industry, we've got to go find where that timber is. And so they looked at the South and they've seen this glut of timber, especially in the fallout of the housing crisis, and looking at what the returns of a 2x4 are down there. To them, they said, okay, well, this is where we're going to go next. And so, I think they have pretty sophisticated operations. They have very large state-of-the-art mills in British Columbia. So they're taking some of their know-how to the South. I mean, certainly, cutting a southern yellow pine log is a lot different than SPF and Doug fir. So I'm not going to pretend I'm Mr. Millman here that understands how that works, but it's not the same type of operation. But I think from an opportunity perspective, it was kind of a necessity for them to make that move. And I think as now that there's this kind of signal that demand is picking up in the housing industry, and not only housing, repair and remodeling is a huge source of demand for for softwood lumber. It's actually a bigger end use category than new home construction.
Interesting.
So now that that's been picking up, I think other players in the market who operate sawmills are jumping in. In terms of the private equity angle, it's probably, I don't really have a good answer for that one. I'm probably not as strong in the finance side, but it's certainly there's a lot of publicly traded sawmill companies that are jumping into the fray here in the South.
Got it. All right, let's talk about risk for a bit. Allie, let's just kind of start with you. Like, all right, all this has happened. The traditional way that home builders bought lumber was they went to their lumber vendor and they put in their order, and it seemed like the vendor took on all the risk. Now there's probably been people that have been crushed because of that risk. So let's just talk about risk, and we'll go from homes to sawmills to trading. Like, how is risk going to reorient itself around the industry going forward? And like, what do you expect home builders to be doing that maybe they haven't been doing in the past? And Stinson, ask smart questions along the way that you know how to ask in this kind of category.
I gotcha. Go ahead. Yeah. Allie, have you seen, this is something I was excited to talk to you about, it would be fairly recent, like within the last quarter, how home builders are getting priced as far as fixed pricing, price time of shipment, and are they seeing a change in how their suppliers are managing the price risk?
So what I've heard from the purchasing agents, and I will be completely transparent that I'm not in the conversations with the purchasing teams on a regular basis. So this is me kind of parroting a few things that I've heard. But what I've heard is they haven't seen any impact of, and I know it's the futures market, they haven't seen any change on what they're able to buy today. The pricing is becoming even more unstable for them. They really just don't have a sense of it, and that's really stressing everyone out. From a builder's perspective on the risks, some of them are warehousing lumber because at least they have a sense of what the costs are going to be when they buy them. But what I would say is what I've heard is it feels like they have a far less grasp in the what they used to be able to buy. I think it was how many months it was. They don't have that anymore. There's just like what you right now is what you're paying, and it seems like that is just a lot.
That's really interesting, and it's kind of what I thought would be a natural progression, because before home builders would get 60 to 90 day, like quarterly price, like this is your price the entire quarter, and we'll ship it when you need it. And if you've done that the last 12 months, effectively, you've lost money if you're a vendor. So it's really interesting to hear that they're actually owning wood and warehousing it. And I personally think they're going to be forced to become much more in tune with the lumber market than they have in the past, because no one wants to lock in prices or overpromise and overcommit. So have you found the different size builders, or are all builders kind of giving that same feedback? The one caveat is the biggest builders are going to get the best service. And like you said, they're on allocation. They're going to get the most allocations. Are they also kind of feeling some pushback on how they're forecasting prices through their vendor?
Well, and it's a good point that you brought up the different size of the builders too, because it's definitely not the privates that are able to warehouse some of the lumber. It's going to be the bigger guys that are going to actually have that space, and they're going to be able to move forward with that. We do talk to privates as much as we talk to publics, and I wouldn't say that it was like, oh, wow, that's a discernible difference, like a huge difference between the two. I think you're right that probably the publics, for everything, that includes the electronics, the framers, the window suppliers, all of them are going to give the publics the better deal, the better access. But I wouldn't say it's been, wow, that's obvious that it's public or privates.
Yeah. That's just such a significant change in how lumber's traded, and how risk is transferred in the supply chain. I think, Dustin, as a trader, mills never want to lock in 3-month pricing or 6 month or 12 months. It's like they just want to sell 4-week clips. And if they sell beyond that, well, what if prices are higher and I locked it in 8 weeks ago? Shame on me. Because home builders on one end, where their world's turning upside down from a risk perspective, and sawmills are on the other. What are they saying about risk management, hedging, forecasting and quote unquote taking advantage of these historically high prices? What's kind of the narrative out of the mills?
You know, I don't really hear a lot of sort of changes in approach in terms of hedging, or, you're right. The industry historically has kind of rolled with the cash market and not really done a lot of hedging. I mean, certainly, I know it raised a few eyebrows. I think the last quarterly earnings, you did see some of the major publicly traded companies that, sawmillers that did have some hedging positions that they obviously sort of kind of hurt their earnings to some degree. I mean, they still had good earnings in my view, but I'm not sure that, I really don't know if there's been a mindset change there from a risk management perspective.
I mean, it would be highly disciplined for all of a sudden. I don't know if that's the right word, but it would be weird for the greedy side of this cycle to be like, we should manage our risk and protect the downside.
I mean, the industry has had such a tough go, right? And I know it's, this is not meant to be a sob story for sawmills, because I know everyone probably listening to this is saying, hey, these guys are making a ton of money. But realistically, the last, 10, 15 years have been a really tough go for the industry outside of, say, 2017, 2018, where there was a good little price run there. Prices are historically low on an inflation adjusted basis for lumber. So, I think, for some of them, I think they just see this as like, hey, this is about time that we're finally making money in the cash market. Why would we, try and, go hedge ourselves out of this here? That said, we're at a point here where, $1,500, $1,600, $1,700 per thousand wood. I mean, that's clearly not going to be sustained, right? So you would think there would be a point where mills would say, well, let's kind of, sell ourselves out a few quarters out here and take advantage of this and maybe manage our risk. And I think, some may do that, but, I don't know. The industry has historically not gone that way. I wouldn't expect them to change overnight.
Yeah, I think the same thing from their mindset. I mean, they say on market. We're just always on market every day, every week, and it feels like the stock market, which I'm not a stock market trader, but they get penalized for hedging on an up market, and then they don't hedge, and the market rolls over, and they get penalized again. So that's just don't hedge at all, which I don't think is wrong. You either need to hedge all the time or don't hedge at all. Because of that, and part of the consolidation of the industry, there's so much risk. The mills effectively don't take any price risk. They're just selling on the market. Home builders have been spoiled up to this point of getting real nice fixed pricing. And then all of us in the middle have tried to figure out who's going to offer the fixed price, because someone's on the other side of that home builder who has 90-day pricing. And it's not the sawmill we just established. So it's the pro dealers, the lumber yards like Builders First Source, 84 Lumber, Carter Lumber, and they commit to home builders traditionally 90-day pricing, and they can at most have 45 days of inventory on the ground as a company. So they're naked the second half of that commitment. And their guess is, sometimes they'll lose money on the second half, sometimes they'll make money, but they definitely price that first tranche of inventory is profitable, and then they kind of wing it the second half. And you can imagine what that's done. That model has done, again, for like 12 months. We've been going straight up, and more acutely so recently. And when Builders First Source bought BMC, that, to me, Allie, eliminated options for these big builders. Like the big public builders, there are not very many lumber yards that can service them in the way they need to be serviced. They need big, giant lumber yards like Builders First Source to face D.R. Horton. And this is me just guessing, just understanding how traders and markets work. D.R. Horton would say, hey, BFS, give us a 90-day price. And BFS internally is bullish, so they're going to keep their price on the higher side. And D.R. Horton says, let me go shop this to BMC. And BMC is like, we got a chance to get D.R. Horton. Let's undercut everyone. Maybe we'll make money, but we got all this market share with the new customer. Well, now there's one less large supplier option for the builder to go to. So I just have been suspecting that that risk transfer. They're going to put more risk on the home builders, and I don't think they're prepared for it. I don't know how material of a difference that will make, but if they're getting 2-week pricing or 7 day, this price is only good for 7 days. They're going to have to be lumber experts, which they just haven't had to have that expertise in this cycle, at least.
And I think
it's going to be an interesting dynamic. Go ahead.
And I think kind of one thing that's been taken for granted, and it's not just home builders, it's, industrial packaging buyers of lumber. I think the assumption has always been lumber is an abundant, cheap commodity. And so why would I spend time managing risk on something that is abundant and cheap, right? And I think, one thing we've been telling clients over the last few years is that, and this is even pre-COVID, that we've seen that, and some of this reflects some of this consolidation of that we're seeing at the wholesale and sort of pro dealer level in the industry. We've seen that the inventory on hand relative to demand has been dropping over the years, and some of that I think is this sort of idea of just-in-time delivery, and let's free up working capital and kind of more professionally sort of managed operations. And I think clearly, that is that's kind of set us up for volatility in the market. And we didn't see it really in 2019, which but it's reared its ugly head in 2020 in a big way with this kind of black swan event with COVID. So that is kind of how we've set ourselves up for this industry volatility going forward.
And I want to take that risk discussion and bring it a different direction for the builders too. And it was Chris's, one of your original questions was about what are the builders going to do if the futures come true and lumber costs go down a little bit in the future? Are builders going to just adjust that, or are they going to have those nice, fat margins? And one of the things that you have to think about too is if we're talking about how builders have sold so many homes that are not yet started, and then all of a sudden, let's just say lumber prices come down and all of a sudden the builder can build it cheaper, they can't drop their price because they have so many people in backlog that have paid for that top line price that they can't adjust it down. The risk that poses goes back to the price ceiling though, because they're pushing up the prices to account for how their costs have gone up so much today. So do you try to adjust? They're not going to drop their prices. I think it would take a lot of different steps for builders to have to adjust their prices, but that's a risk that they're then handling, is how do consumers continue to react to the higher prices? And how do you consider the people that have already put in a contract and you want to make sure they close? Because to Stinson's earlier point, they're building these homes and they don't want to take on the risk that home gets built and there's not a buyer sitting there too.
Yeah, I was just in El Paso and I talked to a home builder that has 1,200 homes. He's just starting a new community. All 1,200 are pre-sold. He hadn't started one of them yet. So that was interesting. Allie, can you just speak a little bit more to major publics versus maybe your smaller regional builder that builds maybe a few hundred homes a year? Like, is this just a short-term thing and competition will remain, or are there any long-lasting effects on how the majors or how the smaller companies will be able to compete against the majors?
Yeah, and I won't be able to answer it specifically to lumber, but just in the overall marketplace, what we're seeing is that the publics are volume, and backfill the lot supply and pay what you need to for land prices. And the phrase that I've heard is that generally it's the publics that can pay quote unquote stupid land prices. So they can go out and they need to backfill. So they're going to drive up those land prices. If you're a private, it's a lot harder for you to be as competitive. And so we have had conversations with a lot of the publics of, hey, we're going to go into a new market, or hey, we want to find a builder that we want to acquire so we can get foothold in a different market. And so we're seeing a lot of consolidation, or at least discussion of consolidation, because right now to be competitive, you do really need to be one of the big guys. Going back to the conversations too, it's not only your access to lots, it's your access to labor. They want to work with you because you're going to have more developments and you're going to have more job stability. And it goes back to just getting access to bricks, getting access to electrical wire, to cabinets. If you have scale, you're in a better position.
Yep.
And that's true in the lumber supply chain as a whole as well, because there's so much scarcity. If you're the biggest, you get first look, and you fight it out from there. But the scale has such huge advantages in these markets.
Well,
these go ahead.
Yeah, no, and I was just going to say, Stinson, the way we've kind of seen that too with lumber, that's in this sort of channel shifting from the traditional supply chain, the wholesaler distributor, to the Home Depots and the Lowe's of the world, right? The sort of big box stores. And, they take priority for the mills in a lot of, not all cases, but a lot of cases, they tend to pay more, they have huge volumes. And that's kind of a twist that's also been added in here to this whole supply chain story. And it's kind of left the traditional part of the supply chain for home builders and large contractors in a tough spot here. So
yeah, that's such a good point that I don't think outsiders understand. Lowe's and Home Depot and Menards, I guess it was 1, 2, and 3, are massive, and they'll go directly to the mill. They have these contracts, and the mill likes it because they just got one counterparty, and they can just lay off all their production. It's effectively their way of hedging. They're not locking in price, but they're locking in volumes. And the last thing the mill wants is to accumulate inventory and not be able to sell it. And that's when they get too much inventory, at least. That's when they get in trouble. So having these guaranteed outlets makes them feel really comfortable that they have kind of guaranteed customers. And what the point of outsiders maybe not understanding this is single family. If you see it on the shelf in Home Depot and you can buy it, that's one less bundle that a home builder, D.R. Horton, cannot buy. They do not get supplied by Home Depot currently. There's weird things going on with folks kind of going in there trying to buy in Home Depot and Lowe's. Home Depot is kind of a proxy for all big box stores, like turning down bulk sales that are ultimately going to resale, or they just won't sell the volumes. So they increase their volumes, and that if you just say there's 100 rail cars committed to the U.S., 50% of that is repair and remodel, right, Dustin?
In terms of demand, repair and remodel for lumber, softwood lumber demand, it's a little over 40% of demand. And compared to residential construction, new residential construction, that's like a third of demand. So let's say like 33%.
So a surprisingly large amount of Canadian production, over 40%, goes to repair and remodel, which effectively is big box stores. Not all of it, but most of it. And if they increase that all, you're talking like every rail car that got committed to Lowe's is one less rail car that's going to go to supply a single family home in the way the current supply chains are structured. And so with a big bump, and I don't know if they talked about it on the earnings call. I did see a quote from Lowe's that they expanded their vendor base to go find more inventory of lumber. That has really pinched the single family home supply chain because they're different. The supply chain that you and I go walk into Home Depot to build a chicken coop, that's like less wood available to go build homes. So it's been a really interesting dynamic this year.
Yeah, and I think the key here too is normally if production was able to expand, right, no big deal. If the box stores, which had a banner year in terms of lumber and panel sales last year with all the DIY activity and the stimulus checks, and they stocked 2021 accordingly. If we had normal production conditions where we weren't constrained from a labor perspective and, we had a little extra spare capacity, no big deal. But given all the supply chain chaos and, some of the long-term structural issues for lumber, that's been a problem, to Stinson's point, for the wholesale pro dealer channel, for sure, for acquiring wood. And that's, again, been problematic for your home builders. And it's showing up in what the market price is for wood.
So that's one. Go ahead, Allie. Sorry.
Oh, sorry. I was going to say, well, first, Stinson, you're speaking my language because the first time I ever built a home was building my chicken coop back in Ohio for my chickens. But all of that to say, I wanted to stick on the theme real quick on when you were saying what the outsiders don't know for the industry. And I think one of the most important things, and I know we're all connected on Twitter, so you guys see me share it a lot, but right now, because of all of the different capacity constraints, 93% of builders are intentionally slowing their sales. And 40% of builders said their sales had slowed from April to May. And that data is as of today. But when you go into the comments, they all say, by design, we're limiting capacity or we've completely stopped. And I think as we're trying to look at, well, is there going to continue to be demand? you may start to see in the coming months, housing data actually doesn't look good and looks actually a little bit alarming, probably over the next 4 or 5 months. You have to understand kind of the nuances within the home building industry, that when they are facing all of these struggles, they have to adjust their strategy accordingly too. And I think that's lost if you're not in the industry.
Chris, I think that's your cold open, bro.
I know.
That's a great intro. That was great. Yeah, earmark that one.
I got it.
Because I said this the other day, and I got it from you, Ali. I think I gave you credit on Joe's show Friday. It's not bearish. I said it's not bullish, but it's not necessarily bearish. We're just kind of hitting capacity constraints, which we've hit on, and a lot of these aren't new ideas that we're bringing to the public. There's just supply constraints, but the data, you're going to have some context, but the demand is there. And to me, a leading indicator could be if DIY business slows down. Justin has said in the past it seasonally peaks here in the next week. That'll be more wood pushed into the traditional single family home supply chain. So we could see more capacity. I don't know how to say it. Capacity increases the second half of the year from a lumber perspective, purely because the repair and remodel starts to wind down. So maybe that could bolster some starts as well.
Two questions. Are homes getting smaller, and is value or engineering these to be smaller and more efficient? Are we going to start seeing more of that as commodities, not just lumber, but continue to go up and tech becomes more important? Like, what's happening to the home that could also help kind of keep price in line?
So are you ready for the worst answer I can give you?
Yeah.
So the answer is that we do have that homes are getting smaller, and that's a trend that's been happening. Really, I remember presenting back in 2017, and all we talked about was attainability. Buy your land, think about density, think about what's the most efficient use of space in the home. We call it right sizing. How do you right size the home that people still love living there? It's just you're adjusting for the price. The reason I say it's the worst answer ever is that we also have this dynamic where I had said earlier, we're seeing so much demand further away from central business districts. The further away you get, the more land availability, the less need you need to have dense communities. And then I'll do a third. With that being said, you do still hear the conversations being, things are great right now. Yes, people want work from home space, but maybe that means turning a closet into a Zoom room. Don't try to expand the footprint. Don't try to make these homes so large and so ridiculous that when interest rates go up, if prices continue to go up, people are stuck, because we know the demographics are good enough to keep the demand. You now have to be really smart with the product and with the land plan so that people want to live in those communities.
That's a great answer.
Yeah. And I mean, certainly from a lumber perspective, this is something we've been monitoring for years. And to Ali's point, the single family home size, I think it's been dropping, I want to say since 2014, 2015. And, affordability has been everything for the market, right? So, people have been accepting, smaller sized homes. And frankly, we haven't been building for that entry level home anyway. We've been kind of building for the upper end kind of since the fallout of the housing crisis. So we've been underbuilding at that entry level or that mid tier point, life point from a home perspective. And so, that is actually, when we think about lumber demand in a house, a single family home uses about 3 times as much wood as a multifamily home, so that's a substantial difference. Part of that is there's just more wood intensity, there's less steel and concrete and things like that used in a single family home. And, and also single family homes are just bigger than an apartment, right? Or a condo. But that was kind of a drag on lumber demand for some time when those home sizes were dropping. Now we're at a point, not only is the share of single family homes probably going to be bumping up relative to multifamily. So that's a positive for wood demand. Home sizes are probably going to go up too, to Ali's point, that there's more space available. It's more affordable outside the cities. And so this is this other tailwind for lumber demand going forward, as presumably I think home sizes will kind of reverse course here from this downward trend we've seen, assuming sort of work from home sticks, going forward.
And a good point on that too is when you look at where is a lot of the building going. We've already talked about that. We were talking Atlanta, North Carolina, Florida, Texas. Those are the markets where you do build single family detached homes. and the markets where the density is less of a discussion than if you have so many people in the Bay Area and LA where a lot of the building's happening. But I do want to say too, it's kind of like a running joke. We have an expert in Houston, and he talks to us. They talk in lot width, and like a 60-foot wide lot is going to give you a really nice home. They're talking about 40s. 40s are still huge homes, but when you're talking about that market, you are seeing that density is impacting the home size. It is just smaller relative to that market, but still a very, very sizable home.
Yeah, a 50 by 125 in Fort Worth, Texas is like as kind of average small lot, which you move that to New York City or San Francisco or anywhere else is just enormous. Let's just talk about multifamily for a little bit. I come from more of a multifamily world in recent years, and everybody in Texas and their mother is building a multifamily project right now. How has lumber impacted multifamily? And, we've been talking a lot about single, but like, how does multi fit into this space?
I'll just speak from a supplier's perspective. I supply a lot of multifamily suppliers, I suppose. We call them jobbers, and they, a developer hires basically a sole source vendor that'll do the lumber, the shingles, the door packages, the windows, the concrete, everything. And lumber is like always the biggest line item. And we're talking about 90-day pricing for single family homes. The standard in that industry is a gross maximum price, a GMP contract that's like 12 months long. So they are under the multifamily suppliers are under they're the most upside down people are, because they locked in prices 12 months ago that they're still trying to fill, or 6 months ago, or 3 months ago, or 4 weeks ago. Like, they're all upside down. And, you're trying to like forecast how high could prices go. Let's bake that in. And there'll be volatility, some dips to buy. We just haven't had the dips. I would argue, no volatility, because it just goes up. And those guys have been really stung. And I've taken a ton of calls since doing media lately from the developers who have not signed a GMP and just kind of played the lumber market effectively and not issued those lumber POs. And now the concrete's poured and they're ready for frame, and they're way offsides on their budget. And there's like no relief in sight. Last point I'll make, because wooden frame multifamily, there's more stress. They need on the wood, they need a particular type of wood. Southern yellow pine is dense, and then Doug fir. And Doug fir is their number one stud species, and that's the most expensive product on the market right now, is a Doug fir species stud trim. And so they're just in a world of hurt. And like Allie was saying, with single family home risk transfer, the same thing's going to happen to a larger extent to multifamily developers. Going to have to figure out how to handle lumber risk, because I just don't see that business model going without any risk changes, because they're getting absolutely murdered right now.
Yeah, I mean, the multifamily guys are really in a tough spot here, just given the lead times to get, from, the breaking ground to finishing, right? So, much more sensitive to market risk from a lumber perspective. Just on top of what Stinson said, I've heard from some multifamily producers, builders that, where they can now, the price of lumber is such that, steel studs on, non-load bearing walls are competitive now. And that's being sort of substituted for lumber where possible. So I think, going back to the volatility and the presumption that, wood is cheap and available, I think a lot of these multifamily producers are kind of, a little bit shock and awe here. The other thing I'll add too, the thing that's been remarkable, from our perspective in Fastmarkets, I mean, we kind of expected, 2021 to be a pretty, rough year for the multifamily segment, just given all the factors that play in multifamily, right? With, the sort of eviction moratoriums and rent prices collapsing in the urban cores. And, you look at the most recent, census housing starts data, multifamily is booming, and it's really rebounded quite well. So, I mean, there's clearly a story there for multifamily, even in this sort of work from home, migration from urban cores to the suburbs, and some of the migration to the south we've talked about. And so, that's a good story from a housing perspective. We need those affordable homes in the market. But it's, from a lumber perspective, there's not a lot of relief from the demand side going forward there.
And I'll add, not from a lumber point of view, but just from a demand point of view. The first thing I would say is we have a traditional multifamily expert, and she said that she's getting, and I think this always surprised me that she even said this, but that they're getting commissioned for studies to do multifamily communities in close to downtown New York. So as much as we say the city's dead, she's still really busy getting some of these deals that are in close to urban locations. But second to that, and I think an asset class that's probably the most popular right now, is that single family built for rent. And so that isn't going to look like an attached product. But I would say when you're talking about competition for lots, competition for land, competition for lumber, competition for trades, you now have just huge piles of money funding into that, builders going into that, companies that are getting created just to enter the single family built for rent space. And that's then going to compete with some of the multifamily projects that are going up, but also some of the for sale as well.
That is such a good point. We own a piece of land here in Fort Worth on 20 acres, and I've never met an SFR developer really in my whole career. And we put that piece of land on the market, and the only groups we've talked to over the last 12 months are SFR developers. And, Greystar, all the big boys are starting an SFR fund. A lot of people are leaving, like a group left David Weekley, and that's all they're going to focus on, a lot of spin outs. It's been the hottest thing that we've heard. So that's a great point. Kind of two more topics, and then I'll let you guys get back to your lives. Okay, so when big things like this happen, opportunity happens. I want to talk about just kind of any efficiency or tech that we might see going forward. And then I also wanted to just talk about the international landscape with countries like, China and Russia, and how America can use its influence to kind of make sure that, we don't see all the lumber go everywhere else, or we can create better deals going forward. But let's just start on kind of the tech and efficiency side. Are there things like you had mentioned, Dustin, even, lasers that are cutting wood in more efficiently? Like, how do we get more efficient in home building, in lumber producing, and trading, all the above?
Yeah, I guess I can kick it off and start it from a sawmill perspective, and then talk maybe a little bit on the demand side too. And Stinson and Ali can jump in. Yeah, certainly. I think you're already seeing a lot of this happening. From a supply perspective, there's tons of capital being invested in sawmills, particularly in the South, just because that's where, again, the incremental fiber is. But one thing that is I've talked about is this labor shortage, right? So we can't really ramp up capacity because a lot of these sawmills are in rural markets. It's hard to attract talent there. This has been an issue even pre-COVID. So any kind of greenfield investment, or investment that can free up bodies to add a shift or not be as dependent on labor, that's going to be huge for the market from a production standpoint and productivity. Again, these sort of auto graders, that frees up a lot of bodies. Instead of having someone visually grade, every stick of lumber that comes across the line, that's a huge, jump in productivity right there. I think there's a lot of investment again in optimizing, logs, things like that. That's nothing new. It's just there's a lot of, especially in the South, a lot of older, smaller mills that don't have that kind of technology. So that's going to be added in there over time. Again, we've had this cash bonanza. The publicly traded companies and the major players in the market are a lot of it, again, is going back to investors, but some of that too is going in and being reinvested into their mills to produce a higher quality product and sort of expand outputs to some degree. So I think technology there is kind of chugging along, and then from a demand perspective, there's a lot going on with obviously panelization, offsite construction. Manufactured homes has never been a huge thing in North America, but rest of the world that kind of has been, how homes are built. And
what is panelization? Are those wall panels that are put together offsite?
Yeah, sure. Yeah. So, especially I think that's probably bigger for multifamily, right? Especially at least up here in the Northeast, that's kind of, bigger for a lot of the stick framed, sort of, I guess, concrete podium, 4 or 5 stories on top of that. But, I think there's efficiency gains there, right? If we're talking about high priced, lumber going forward, there's going to be pressures from the industry to economize and cut their wood usage, right? So I do think from a builder perspective, the big thing that you hear about right now is, again, this sort of component manufacturing, offsite truss manufacturing. That's kind of low hanging fruit that, again, your bigger kind of pro dealers or distributor kind of hybrids are doing a lot of that to help your home builders. Stinson talked about Southern Yellow Pine. It kind of needs to be in a controlled environment. So that's how they're kind of taking advantage of that material in those sort of contexts. And I think, that can cut out waste, that can cut down, the price of framing. So you're seeing a lot of that sort of thing. But I'm curious, Ali and Stinson, what you guys are seeing.
Yep. So we did a white paper. So I don't think the idea of trying to build a home in some kind of prefab is necessarily new because of COVID and because the lumber costs have gone up. It's just the builders are maybe putting a little bit more attention into it. But back in, I think it was 2017, I did a white paper on, there was this interesting period where a lot of Japanese companies came in and bought up and did joint ventures with builders in the US. And as we were looking at that, we were like, well, in Japan, the majority of homes are already built prefab. And so back in, it was 2017 or 2015, we were saying, okay, well, we start to think that maybe they're going to bring those efficiencies over here to the US and maybe that's going to really transform the market. And here we are, however many years later, I can't remember when I wrote it, 5 years, let's say 5 years later, where we still haven't really seen that happen. And in that white paper, I reached out to different companies and I was like, why is this not happening? Because the joke is, you don't drop off the parts to build a car outside your house. So why do you build the house on the site? And the answer ended up being really obvious why it is the way it is. And one is that there's shipping costs, tremendous transportation costs. So, okay, awesome. You're going to build it in a factory and you're going to limit waste and maybe you'll be a little bit more efficient, but now you still got to get it to the property and that costs money. And that money doesn't actually help you save on building a home. So why are you going to invest in this if you're not actually going to be able to lower the average sales price? Another thing is that, okay, well, you can build it in a factory. You're going to be more efficient. And you know what? You're going to save time. And that actually is a little bit of a cost savings because if you're financing it, you can get some money back on that end. But then the third is you need know-how because we have Clayton Homes and Berkshire Hathaway and they own that. And they're building manufactured homes and they're so popular. They're doing really, really well. But they do still, I love Clayton Homes. They do still look a little bit more like a manufactured home than not. And some people just would prefer their home not to look like that. So a company called Integra then enters the home building industry and they had started doing actually, I think they ran an entire company in Europe of prefab homes. And these homes, you put in the rendering and it looks gorgeous. You would have absolutely no idea it was built in a factory. Integra's doing really well today in the US market, but they have their own limitations. Your production capacity, you have labor capacity the same way you would in the other markets. Plus, you're going to tell a builder, hey, I want you to change the way you build, but you're not going to save that much money. So it kind of goes back to a lot of the same themes is there is desire and everyone laughs that it's archaic, but give us a good solution. And right now there hasn't seemed to be a perfect solution to change the way we build.
I know it wasn't the initial point of the podcast, but since I have your attention, I just have to ask this because I think about this all the time. The Empire State Building was built. I'm kind of botching it, but I'm not totally between 18 and 24 months, and it's built like the fortress. I mean, it's so quality and it was built quick. And then you saw how long it took the World Trade Centers to get rebuilt. And people predict now if you were to redo the Empire State Building from concept to finished product, it could take 7 or 8 years. The time to build just keeps taking longer and longer. And the products seem to be getting cheaper and cheaper. Why? I guess maybe my question is that just because a lot of government regulation and a lot of policy that's been put into developing that's slowing things down? Why do things seem to get slower and slower?
I think you probably answered your own question.
Okay. I figured. But you're the chief economist. I had to see if there was another silver bullet I was missing. Okay, fair enough. So it's policy and regulation, really. Okay.
Yeah.
Stinson, from your perspective, is there anything in an efficiency way that you look at from your side of the world?
No.
Okay.
I watch it all, and everything they covered, everything I would say. At the end of the day, I don't know anything about building. I don't know I couldn't read a blueprint. I just know the prices. And if they figure out a way to use less lumber but have the same square footage, maybe there's codes and zoning they can revisit. Anything they can do to lighten the load to build the same home with less product. But I just ultimately react to that in pricing. But no, I think they did a great job.
And before we move, sorry, go ahead.
Oh, sorry. The one thing I would say too is I don't know if it's 3D printing that uses concrete, but I know they use some recycled material. There's obviously enthusiasm around 3D printing, and can that at least help alleviate some of the cost burden on the lower price point? But I also think one of the things we talked about at the beginning of this presentation is that even concrete is in short supply. So it's great that you maybe found a solution for lumber, but then you're running into another material that also is bumping up against capacity issues.
Yeah, I think there's a lot of low hanging fruit on the margin that, they can probably squeeze out a percent or two of cost reduction. But I think to Ali's point, a lot of the efforts to, that are kind of game changing technologies, there's just a lot of lead time, and there has to be a lot of buy-in from the rest of the supply chain. And it hasn't really happened yet, but it is kind of remarkable when you think about, especially for residential construction, single family home. You think back 100 years, how we were framing a house. What's the difference between 100 years and today? We've got, nail guns and, power saws and things like that, right? So that is helping. But when you look at productivity in residential construction, particularly for single family, we haven't had a lot of productivity gains over the last century or so. And, I think to Chris's point too, there are some regulatory elements too, but also just how we build a home, on site hasn't evolved that much when you think about other industries and how they've evolved with the internet and technology, things like that. So.
Well, most of the framers are about 100 years old anyway. That's probably why there hasn't been many improvements. We need some young trades folks in there to replace some of that, which is the labor we're talking about. But,
yeah.
All right, go ahead, Chris. I'm sorry.
No, that's blue collar labor across the board needs to become sexy and cool again. The people, what they're getting paid is sexy and cool, but people seem to still want to be, like a social media manager or something coming out of college than a plumber. But I think that'll change. Okay, one question before we move to international. You were talking about older mills in the South that are old and kind of defunct. I'm a value add real estate kind of guy. So the immediate thing I thought about was, are there opportunities to buy up these older mills and add technology and all this, or do you have to kind of start from scratch?
It depends. I think, I think there are probably assets out there that are attractive. When I talk to, some of the major sawmillers in North America, I think the general consensus is, the best assets have been picked up. And, obviously when lumber prices go up, the valuations on the sawmills go up a lot too. So right now, with these record prices, some of these, older sawmills have, there's pretty high asking prices. And I think that's kind of a turnoff for potential investors, just looking at what the capital investment would be. So to some extent, that is pushing some to greenfield. But, I think it's important to keep in mind too, that investment, I talked earlier about, from a financial perspective, it's a relatively nominal investment for a greenfield mill, or, if you're adding CapEx, whatever, kiln drying capacity, or you're redoing the front end of the mill, whatever, the log sorting operation, whatever it may be. But there's other considerations too. I talked about the labor issue. That's been an ongoing issue in, rural parts of America for a while. These sawmills, by their very nature, are out in kind of rural parts of, the country where the logs are, right? So, a sawmill, generally the logs kind of travel, less than 100 miles from the mill. So they got to be close to the logs to be viable. So labor's been a constant issue. Some of these mills have, 20, 30% turnover annually. of kind of the grunt kind of blue collar labor that mans the operations. So it's not only a matter of finding the logs, it's planning out, okay, how are we going to source labor consistently? What's the supply chain look like? What's our route to market? And also, there's parts of the South in particular that the log baskets are getting more competitive as there are mills being added or mills are adding capacity. Right now the kind of the hot state where a lot of investment is going in is Mississippi, and that's because I think the relative stumpage prices are not quite as high as some of the other more central or eastern, southeastern sort of markets where there's a lot of mills that have been added. So there's just a lot of planning and logistics beyond just sort of the finance aspect. But I do think people are looking at some of those assets in the South right now, and there's going to be probably more acquisitions made over the next year or two. And I would say too, you look at what Canfor has done. They're the second biggest lumber producer in North America. They've actually gone offshore for their acquisitions, and I think part of that is they have an international business. They export offshore, so they acquired some mills in Sweden and the Nordics, and so for them that made a lot of sense. And I'm guessing the valuations of the sawmills are not nearly as sky high as we see in the South. So you're going to see more M&A, but I think it's the quality of assets are probably not quite what they were, say, 4 or 5 years ago. So.
All right. Does all of the lumber that we use in America come from North America? Are we pulling in internationally? And on the flip side, are other countries pulling out of North America and using our lumber?
Sure. So just for listeners, kind of a rough breakdown, in the U.S., we consumed last year about 52 billion board feet of lumber. And that grew about 6-7% year over year, something like that. And of that, about a little over a quarter comes from Canada. So that's imported from Canada. And that's mostly sort of SPF, but there's also dug for another material too. But, SPF is sort of the big, commodity that comes out of there. Most of the rest of the volume that we consume is domestic. So it's Southern Yellow Pine, or it comes from the Pacific Northwest. There's some softwood lumber in the Midwest and the U.S. Northeast as well. But, those are kind of generally the producing regions. Traditionally, the North American market has kind of been, and when I say North American, I'm talking mainly U.S. and Canada, it's kind of pretty insulated. That it meets its own demand with domestic production. But we have seen more offshore lumber coming into the U.S. to kind of fill the void of some of this loss of capacity that we've seen in Western Canada. And it's mainly from Europe in terms of at least what's dimension grade lumber for framing. It comes from mainly the Nordic countries, or it comes from Central Europe. You're seeing huge, volume growth, 20, 30%, 40% growth year over year, huge volumes, but it's still small. The offshore imports, outside of Canada that come into the U.S. only account for about 3 to 4% of demand right now. So it's still a small piece of the puzzle, but it is helping alleviate some of the supply shortages to some degree. And the U.S. and Canada do export lumber as well. The U.S. exports have been kind of dropping since, I want to say, 2018, when sort of the trade war kicked off. You saw a lot of sort of lumber lose share in China with some of the duties that were put in place. So some of that volume has to go elsewhere in the export market globally, or some of it has pivoted into the domestic market. And then the Canadian producers, especially out of British Columbia, have a pretty big export presence offshore too, particularly in China and Japan, but all over the world mainly. But those are the two big consuming markets. I think we're out of Canada, outside of the U.S., you're talking about a little less than 2 billion board feet of exports. And that material varies. Some of that is high grade material that goes to Japan. It's sort of, they call J grade lumber. It's a little bit different than what, sort of some of the more sort of average lower grade material that comes to the U.S. market. And then China is kind of a mixed bag, but there's a lot of kind of more low grade industrial material that goes there too. So, there are exports that go offshore, but when you think about the Canadian producers, 50% of their production goes to the U.S. So the lion's share of their business is dependent on the U.S., to kind of break it down a little bit.
What percentage would you say goes to China?
Oh,
Canadian.
I would have to take a look. It's probably, again, don't quote me on this. I'd have to go see. I think it's around, I want to say 300 to 400 million board feet, but I can double check that. So, probably around 20%, 25%, something like that. So,
and then how much, you may not know, but it stays in Canada. Canada producers can sell it to Canadian consumers.
Yeah, the Canadian market's pretty big. So again, I said, the U.S. is around 52 billion board feet. Canada consumes, between 8 and 10 billion board feet annually. So it's a pretty big consumer, but not the behemoth that is, the U.S. market with, single family construction dominating, the residential market. So, so there's a good amount of volume that comes that stays, especially the Eastern Canadian producers. They focus a lot on, the Toronto market, Montreal, kind of those big markets there. So,
question.
How much? Go ahead, Allie.
Oh no, you can finish your thought.
How much lumber do the Canadians produce on a board footage perspective?
It's
30 billion.
No, I think it's let me just think off the top of my head here. It's about 10 billion. I think it's closer to 25 billion board feet. This is quiz time here. I'm going to have to go check my answers, but I think it's around 25 billion board feet. So,
all right, that's it. I just, they produce 25 billion. The U.S. uses 52 billion. Not all of that billion board feet is going into homes. It's decking and industrial, whatever. But there's room for some offshore sales to pivot back to the U.S., I think. But, will it make a material difference? I don't know. Sorry, Allie, go ahead.
Oh, yeah, go ahead, Allie.
Well, I think this is going to come off probably very uneducated because I don't know your space the same way you guys do. But I wanted to play contrarian, and I just wanted to feel out, is there an environment where 3 years from now we're oversupplied? Of the mills have really ramped up outside of the U.S. They've ramped up. Housing hasn't followed the path that everyone thought it would, and we're not hitting 2 million starts a year, and now you've made all these big investments, and now we are where we are. Is there any chance that plays out?
You're really trying to get Stinson and I to fight here, aren't you?
Yeah,
you're really trying to pick a fight here. So, Stinson, go ahead.
Oh, okay, all right. If housing doesn't go to trend and kind of keep bumping up to this capacity ceiling, there's significant downside. I've always said demand side is the only thing that can fix this. If supply could have, they would have done it at $800 per thousand board feet. So I don't. If you're confident in the housing cycle and housing demand being at least where it's at and maybe growing, but even if it just stagnates because of capacity, it's going to be very hard to outproduce this market, in my opinion.
Yeah. And, Allie, that's actually a great point you make. And this is some of the hesitancy for why, sawmills are reluctant to go gangbusters with adding capacity, right? Right now, the lead time from breaking ground on a mill to when you start production is probably closer to 18 months. Normal conditions, it's probably between 12 to 18 months. So, are you confident enough that once you start, you're going to have record prices, right? So there's that. And then also ramping up the mill takes another, again, 12 to 18 months. Usually they'll start with one shift. They'll optimize the mill. They'll produce some boards. They'll get the, sort of the kinks out of the mill. And then once they can recruit enough people, they'll add a second shift. So, you're talking about 3 years to realizing the full production output of the facility. So, I mentioned earlier that, it's a relatively nominal capital investment, but you also got to be certain that there's a good return there. Now, I think the margins the mills are making right now, some of the paybacks on those investments are, you're talking a few years and those mills are paid for. So I would say that the risk is actually, reasonable given the market environment right now. Now, when you're talking about, well, can we have a correction in prices? I think the supply side's going to have trouble keeping up in the short term, just given, especially this inventory situation. We're so short on inventory. These mills are going to have to run full to not only meet demand, but plug that inventory gap, which is pretty big. But I do think, there are some risks in the market, right? We've talked about with housing. I think there's a good demographic story, but if we have a cooling in the remodeling side of the market, which seems plausible with stimulus rolling off, people going outside their home and traveling again, and not as much pressure to improve their home, right? So you have a cooling effect there. Maybe interest rates go up. Maybe home prices keep appreciating, at a level where, affordability becomes an issue. The resale market, maybe that comes back. We get some inventory there that puts less pressure on the new construction side. In our view, that could set up 2022 not to be a bad year for housing, but it could be kind of a flattish year if the supply chain is still a mess and housing is not, going gangbusters for all these reasons I just mentioned. So you could have a situation that, we think there's going to be a pricing correction that's pretty big, but the industry is going to remain volatile from a pricing perspective. So, there's a good story for housing. So I don't think we're talking going back to 1, 2, 1 through 3 construction, but this industry has always had a reputation to outproduce itself. And I'm still skeptical that we're at a point where, there's a situation where they won't be able to do that. Now, if we get housing starts, 1.8, 2 million starts every year for the next 2 to 3 years, remodeling's growing high single digits, yeah, then forget about it. Forget about it. It's
going to be for longer, baby.
Yeah. But if you have a cooling period,
traders don't use nuance, Dustin. I'm the most nuanced trader you'll meet, and I barely use it. So good for you and your academic stuff, but we're higher for longer. There's no doubt about it.
All right, I'll go with higher for the next few years. I'll compromise there. So.
Well, we can settle this once and for all. We'll all go around. In 12 months, what is your prediction of the price of 1,000 board feet of lumber? All starters, 700.
Oh, Allie, no, Allie's first.
All right, Allie, you're first.
I said, don't ask me. Don't ask me.
Yeah. Well, Allie, what do you think housing starts are going to be then to finish this year?
Yeah, that's a fair question.
Our forecast is for a 13.4% increase in single family. We do multifamily forecasts, but I didn't bring those with me today. But we have a single family growth of 13.4%.
What would that number be for single family?
1.1.
I think lumber next May will be $800. The futures price effectively will be $800.
Stinson, we're actually not that far off. For our view for next year. I mean, I think I could see in the summer months next year around 600 to 800 per thousand in the summer. We're calling for the year to average for 2022 around $600 to $650 per thousand. That's our best guess right now. So, but that's with a ton of volatility baked in. So, there could be a big upswing and a big bounce, in the summer months. But, to keep some perspective, commodity prices in the long run typically are driven by production costs. And again, for the high cost producers in the industry, and this is going to evolve over time. This changes, log costs change and exchange rates and things like that. But, if we're at the $500 or $600 range right now for the floor, there's a lot of downside risk to pricing in the market in our view over the next few years. But it's going to be volatile. There's a lot of demand there. And again, we've got this inventory issue that's got to be resolved. So.
And this is a really dumb question. Like in oil, if oil drops to 30, it really isn't good for anybody but the consumer. Is there a bad range that lumber could get to where it's actually bad for the industry? Or if we go back to 400 a board foot, we're still fine?
Yeah. I mean,
Stinson.
It's sort of fluid. It's sort of fluid, right? So I mean, certainly if you saw lumber go down to the $300 to $400 range, I think parts of the industry would suffer, and some of that too is dependent on how quickly it happens. Because if the prices drop slowly, the log prices adjust, and if the log prices adjust, the production costs come down, and the mills can still make money. But if you're talking about a collapse in prices in the span of a few months, presumably there could be a situation next year where you have $500 lumber and there could be some mills underwater. I don't think that'll be the case for long, but there's a lot of room in a commodity industry like this. That is kind of the true floor for prices. And so if you have a cooling in demand, there's a lot of room for prices to move downward. So.
Yeah, anything below 600 is a problem for the industry, in my opinion.
As a trader or the industry as a whole?
As a trader, I don't really care.
Yeah.
But as the industry as a whole, it'll be a 2019 repeat. Lots of mill shutdowns, lots of mill curtailments, because we got to below $300 per thousand because, well, again, no nuance here, but because mortgage rates went above 5% the second half of 2018, we effectively went through a recession in our industry. I think in housing too. Just the growth was negative, and it would just cause more lumber to go offline, and we just kind of repeat the cycle we're in now. Because one of the reasons prices are so high was mills shuttered capacity in 2019 because they're operating at a loss, and that break even just kind of goes up every year.
Yeah. And just for perspective, prices for lumber, for a lot of framing lumber, were in the $300 to $350 per thousand range, which was a huge problem for the Canadian mills. And I don't want to get too much into the technical aspect here, but the stumpage prices in Canada, which are based on sort of a mechanical system based on the provincial government, was kind of lagging how fast prices fell. So these mills are getting really pinched on their, a lot of them were in the red and they had to curtail. Some of them closed permanently or indefinitely. And so, yeah, that was really bad for the industry. And let's be frank, there's a lumber duty too that comes into play too, that also adds to these mills' production costs. And so that the Canadian mills, that 1-2 punch was really tough. I think that cost floor is higher for the break even. To Stinson's point, where it is, it's hard to tell depending on how fast the prices fall, but it's probably higher than that $300 to $400 range that we saw in 2019. So,
yep. All right. I'll go around one more time. Any closing, anything you'd want to say that might be interesting? Not to keep going on a soapbox, but if you had to say like maybe something that the general audience could think about going into the next year, if you had to leave with a closing statement, what would it be?
I'll go first. I have literally nothing to say. We covered a lot of really good ground, and it's really been a fascinating discussion to tie in the production to the end user, and then the supply chain in between. But I just think we're higher for longer. That's my thesis: $800 or higher for a couple of years.
So you do have something to say.
I do. Well, I start talking and I keep going. I get it.
Allie?
All right. Yep. So I would leave you with two thoughts. The first being is watch what happens to lots over the next 12 to 18 months, because there should be some more inventory and a little bit of a break on the supply constraint from the builder side because of some of the land development that's going on right now. But the second thing I would say is watch perception. I'm really hyper focused on how the media portrays what's happening in the housing market and the consumer's reaction to it. And we have heard in our data that came out today, I did see more comments of quote unquote buyers are worried about buying at the top and different things like that. And obviously the bubble word is just coming up all the time. And perception, I'm not saying becomes reality necessarily. I am saying that people can get skittish and people can get a little bit anxious if they start to feel that the housing market is a little bit uneasy. So I think those are the two important things from my end.
Dustin?
Yeah. So, I think the one take home that I would convey to listeners, Stinson and I have our back and forth here on what the future is for prices, but and we have a little bit of a different view there. But the one thing I will say is people should prepare for volatility in the wood products market going forward for the next few years. There are some structural aspects with the long-term supply situation that is going to make, create some growing pains for the industry. We have this shortage of inventory and distribution that even if demand cools, that's not going to be resolved overnight. And and demand, even if it cools, is going to still be fairly elevated over the next few years. So you have just given the demographics and this work from home movement, all these factors at play, the remodeling market, all going to remain strong. So, folks should prepare, for the future of, wood prices being very volatile. That's what was a commodity that was abundant and cheap, that may not be a guarantee anymore. So that's something that we convey to our clients and our readers. So hopefully that, listeners can prepare accordingly for what's ahead in wood products. So.
Y'all are the best. I echo what Stinson said. This has been more than I even could have expected. Allie, Dustin, Stinson, thank you all so much for taking a couple hours of your day to chat about this. This was fantastic.